Welcome back, wolves and lions. Alright, first of all, come on over to this other YouTube channel I have, because if you're interested in the stock market, which you should be, I post the economic and stock market videos and for metals on this channel first, and then I post them whenever I have time on the other WolfPack Cryptos channel, right? So sometimes, if it's stock market related and metals, I post those videos on the MMGinvest channel, and sometimes it's 2 days prior to me posting it on the other channel because it takes hours to upload videos, and I don't always have the time to do that. But and then the crypto videos, I post those on the WolfPack Crypto channel, and those usually go up a day or two prior to me posting it on the MMGinvest channel. So you have to be in both if you're interested in more than just crypto, or if you're interested in more than just economics, stock market, and metals. And plus, it helps me out. I want to get this channel to 1,000. Alright, first of all, this is not financial advice. I'm not your licensed financial advisor. I'm not a licensed financial advisor. Stock market, the stock market, economy, and shares of companies, stocks, are extremely volatile, extremely risky. Do not invest anything you're not willing to lose or lose sleep over. Have your stops in place. Emotions out. Alright, I'm going to do a quick just update. So the S&P 500, this is a monthly chart. It's on a 6 count. So I am expecting 7, 8, 9 more months of upside. So 3 to 4 more months of upside. Now, if you guys remember, you have to keep this in mind. When I say something, I'm trying to predict the future, meaning it's forward looking. So weeks ago or months ago, I started talking about a stock market melt-up. Here we go. Stock market melt-up. This was 2 months ago. And so far, that is exactly what is happening. We're hitting all-time highs again. And I said in this video 2 months ago, the reason this will happen is because of the Fed. And it might end up, the U.S. stock market might end up like Venezuela's, right? It'll just keep going higher and higher as the real economy and inflation, the real economy starts deteriorating and real inflation really starts picking up. So this was my first video where I started warning you guys 2 months ago, or over 2 months ago, that this was going to happen, and fast forward to today, it's happening. So here's S&P 500. I expect a 7, 8, 9 count to play out on the monthly, and that could take us to 3,300 on the S&P 500 easily. So we'll end this year with probably higher, hitting new all-time highs. If we go to the weekly chart on the S&P, it's on a 5 count. So the weekly still has 6, 7, 8, 9, at least a month to go higher, according to the TD indicator, sequential. And it's been very, very accurate. I would give it about a 70% accuracy, 60. It also takes some skills to know when to use the TD or to actually take it seriously. Here's the daily chart. Daily's on a 2 count. It is coming up on a 13 sell, because there's 2 counts. There's one in the background, and that might cause a little dip. And I expect that dip to happen right after the FOMC on the 27th of this month, July. Because they're gonna cut rates, and when they do, it'll probably end up being a buy the rumor, sell the fact type of event. So it actually, the market might start falling a few days prior to the Fed meeting where they will cut rates, or it'll do it right after, you know. So keep that in mind. We'll get a dip, some sort of pullback, nothing serious, not a crash or anything. I still think the stock market's going to melt up for the rest of this year. Next year, that's a different story. It's a little too far into the future for me to talk about that right now. Here's the Russell 2000. Now, everything else is hitting all-time highs. Meanwhile, the Russell 2000 is not. The Russell 2000 gauges the economy much better for the U.S. than any of the other markets, in my opinion, because it tracks mid-size, smaller companies in the U.S., which are the backbone of the economy. No, it's not these 500 Fortune companies. The mid-sized companies are the ones that hire more people, actually produce things in real life, and blah, blah, blah. And they're not international. You have to understand that. Every 500 Fortune company isn't really an American company anymore. It's an international company. They're all around the world. All right? Like a good example would be Apple. Apple's an international company. It doesn't even bring money back to the U.S. It keeps it on offshore shell corps, and that's why they don't pay taxes. And they have stores all around the world, and their manufacturing base is literally in China. Didn't they move their headquarters there as well? I'm not even sure. Just to avoid taxes, because in China you don't even have to. Corporations and companies don't even have to pay taxes. China's technically more free market than the U.S., and that's why China is going to be the next superpower within probably within the next 5-10 years, easily. All right, Fang Stocks. Fang Stocks, they help push up the broader indices like the 500, like Nasdaq, S&P 500. They're breaking out. So the Fang stocks are breaking out. Major resistance. Here's my blue line. This is a daily chart of the Fang index. And it's breaking to the upside. So I do expect, this is why I think the rest of this year the stock market's probably going to do fairly well and keep hitting new all-time highs. Here's light crude oil. It's at 60 bucks. It did go up in the past week or so because of the weak dollar. Oil is extreme. It's not my thing because look how volatile it is. People just get wrecked in oil. And geopolitics matter. You know, there's a lot of manipulation from governments in oil. That's why I don't like it. It's funny because mainstream media will blame speculators in the free market when it's really government policies and geopolitical warfare. Because of the petrodollar, right? Because dollar's technically pegged to Saudi oil. All right, so I don't know. Right now, I don't know about oil. It might consolidate a little bit more, and then it'll probably go higher. I think oil has bottomed, and it's only going to go back up for the U.S. here. Here's the Nasdaq daily chart. It's breaking out. I mean, Nasdaq pretty much follows S&P 500. Yeah, that's pretty much it. All right, I just want to show you guys one more thing about the S&P 500. Let's go back to a monthly chart. Monthly was on a 6 count, remember? So possible 9 count to the upside on the S&P 500. Let me zoom out. What does that look like? Look at this. This is the S&P 500 since 1971, since the gold standard was taken off and the central banks can manipulate interest rates and cause a debt-driven stock market bubble. Look at this. What is this starting to look like, guys? I'll give it. I wish I had that chart I was looking at the other day. Let me do a comparison. I'll just add symbol. And it looks like, in my opinion, it looks a lot like Bitcoin in 2017. I have to play around with this to make it fit. Let's make this candles. Okay. So ignore this, right? This is current. This is the current pump, which is ridiculous on Bitcoin, which is gonna, in my opinion, crash. Go to WolfPack Cryptos if you want to know about cryptos. All right, so, but this was the 2017 bubble in cryptocurrencies, right? If you look at it, the bottom candles, guys, don't look at the top candles. I know this is confusing. But look at this. It goes parabolic. If I go down onto a daily chart, it's easier to see on Bitcoin what it looked like. There we go. So this is Bitcoin, right? Look how parabolic it looks. And if I zoom out, since 1971, it's looking very parabolic now, the S&P 500. It's starting to go 90-degree angle since we broke out last week to new all-time highs. And it could go up more, right? It could go up, who knows? Go to 42, go to 50, you go to 55,000 S&P 500, right? I don't care because metals are going to go even higher. And you have to account for inflation as the stock market. When you sell your stock shares, you're not discounting the inflation because that's why your shares are going so high. Now, even if I put it on a logarithmic chart, it looks different, right? I get it. But it still looks stupid. Still looks parabolic. Here's a logarithmic chart of the S&P 500 on the monthly. It's still overdue for a correction. I don't care if you put it on a logarithmic. I'm just telling you guys in the long term. I don't know when it's going to crash. It could crash next week. It could crash 3 years from now. It could crash 5 years from now. I don't know. I don't know at what extent they can manipulate this, alright? That's pretty much what I'm saying. But this is starting to look really, really parabolic. Alright. I just want to show you that. Alright, let's look at gold and then we'll look at bond yields. So, a few weeks ago I bought in a leveraged 300x gold ETF. It's been doing great. Real good. Real great. I bought it down here. And the ETFs have been just exploding. The gold and silver mining ETFs, even though silver hasn't really moved up. Here's gold. Gold is on a 7 count on the weekly, so maybe 2 more weeks of upside and then a pullback. I prefer gold stay above 1400 and go a little bit higher, maybe 1460, and then we get a pullback to test 1400, and that pretty much confirms, like, I'm 100% sure we're in a bull market at that point. Right now I'm in right now I think it's like a 90 to 80% I'm certain we're in a bull market, all right? But I'm fairly certain because I'm going all in at this point. Oh yeah, promo code 10% off for MMGinvest for mining stock research, which is doing pretty well. Personally, a few of them have gone up hundreds of percent already. 10% off for that. The promo code will be in the comment section, and I'll pin it to the top. I'm gonna extend this discount because a lot of people are buying, and I need more money to buy more mining stocks. So the weekly's on a 7. Let's go to a monthly real quick for gold. It's on a 2 count. So this is why I'm not like 100% certain yet, but I'm pretty damn certain. I need this to be a 3 count to the upside on the monthly. So if gold could just run to 1500 on next month, not July, not this month, but August, right? If it could run up to 1500 by August, and it probably will because the Fed will cut rates in July 27. So then we have a 3 count, 3 green candles. We already have 3 green candles, but we'll get a 3 count on the TD sequential, which will set us up for 9 months to the upside, right? So then we would have 6 more months to the upside going into 2020 before a significant correction on the monthly time frame. All right, and that's what I just want to show you guys. The daily, it's consolidating right now. We have a nice little wedge here on gold. And yeah, I mean, it's not even a wedge, it's just a triangle. And we'll see if it breaks out. I'm assuming it's going to break to the upside as of right now. What else? Silver. I showed you guys in the last video the gold and silver ratio. My last video was very good. You should watch that if you missed it. Listen, once silver gets above, this is a weekly chart of silver futures. Once silver gets above my blue line here, or even the 200-week moving average. So if it could get above 1650, and especially above 1650 to $17, if it get past that range, right, $17 and $16.50, and break $17 an ounce, it's game over. They cannot stop the bull market in precious metals. But so far, silver's been lagging, and eventually it's going to break out. And when that happens, it's gonna be a wild ride to the upside. All right, yields. So if you watch this, here's 2009 mortgage-backed security crisis. It's I've shown you guys this 100 times. It's that's the shaded area. The yellow line is time. And you just go to gurufocus.com, yield curve, and you could play with this. So here's the yield curve on the left. We're coming up on 2019. And here's the yield curve. The low interest rates, the long-term interest rates, right? And now we're boom. So let me rewind. I can't catch it, but you can see the short-term interest rates rose above the long-term. But overall, this entire line was down here. It started down here. That was the beginning of the bull market, right? In the 2000s. Although that bull market wasn't that great. Oh no, I'm looking at the 90s. That's why it looked weird. Alright, hold on. This is what the yield curve looked like right before 2009, 2007. This is right before the Great Recession. Look at this, the long-term yield versus the short-term yield. But before the recession, it inverted in 2007. So where are we right now? This is 2010, 2011, 2012, 13, 14, 2015, 16, 17, 2018, it's inverting. 2019, it's inverted. So the yield curve's inverted. Now the long-term yield is it's steepening. What I'm trying to say is when the stock market crashes, people will go into bonds, and that pushes up short-term interest rates. That's the free market acting. and then the Federal Reserve tries to artificially drop the short-term interest rate to stop the market from crashing and the debt coming due. Because as interest rates rise, people default on all their debts, public and private. Does that make sense? So right now it's inverted. There's like, once it inverts, it could give you 6 months to like 18 months, something crazy like that, before the stock market really like crashes. But this time around, what people aren't anticipating on is the bond market crashing, because the debt is so great that the U.S. can't pay it off and they can't do anything besides print money. So in the end, the only buyer is going to be the Federal Reserve, and when the only buyer is the Fed, you get hyperinflation. That's what people don't get. Alright, so that's pretty much it for now. If you guys enjoyed this video, remember 10% discount. It ends next Sunday, so you have a week. And then go to MMGinvest. Leave anything in the comment section. I do answer. And then smash some likes. Share my videos. It's the only way my channel grows, and I'll keep doing this. And if you enjoyed it, you know, do all that. I'll see you guys in the free chat rooms below the video, because for some reason people are stupid. They put in the comment section, how do I join this? How do I join that? For one, I have a banner across the top with the URLs, which are short URLs. Then below the video, there's a description section where there's links to all the chat groups that are free, and then links to the websites where you could go and join the private group where you get research on you know, mining stocks. There's one for cryptos as well. Until next time, guys.